Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared screen and disclaimer. Be aware neither Market Chameleon, myself, or Dimitri are registered investment advisors or a broker-dealer. If you're searching out for investment advice, please search out a registered representative. This show is for informational purposes only concerning Market Chameleon tools and the product. With that, D, you ready to roll?
Yep, good morning, everyone. And I am going to share my screen here. While I'm doing this, quick note to anyone joining us for the first time. Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into the live chat on YouTube. Will's watching it. He'll let me know. And before we get to the questions, we're going to take a couple minutes to see if we could get insights, what's going on in the pre-market hours. This gives you guys, some time to put those questions in, and then we'll move on to the questions afterwards. So let's start out with the pre-market report. Sorry, I'm just distracted. I'm looking at something
Worse.
as I'm doing it. So let's take a look at the pre-market report. Here we start out with this calendar view up top. And this shows us summary statistics, what happened in the pre-market hours on that particular date. You see the last weeks of data, and we put it up there so you have a way to compare today's action versus what's been happening in the most recent days. It also allows you to quickly eyeball if you see any trend or an unusual day that you could click on and go to those details. Today, we are over here, April 25th, and so far we have 309 stocks trading higher in the pre-market, 475 stocks trading lower. We have 100 million shares trading on up volume versus 76 million on down volume. If we convert that volume to dollar value, we have $1.1 billion worth of stock trading higher, $5.2 billion worth of stock trading lower. So from this perspective, looks like so far traders in the pre-market hours have a bearish lean or bearish sentiment. Let's look at it from a couple more perspectives, and then we'll move on to our questions. So I'm going to scroll down here, and now we get this granular view of what's going on in pre-market hours. You see stock symbols with prices, price changes, volume, market cap, etc. We have our most active stocks, the biggest percentage gainers in pre-market, biggest percentage decliners, and 72 stocks here made it onto our biggest percentage gainers list. 111 made it onto our biggest percentage decliners list. And to make it onto this list, we do set thresholds in place because stocks in the pre-market can have low volume, low liquidity. So if that's pre-market activity meets our thresholds, it can make it onto this list, and that includes small cap stocks, ETFs, leverage products, could be preferred stock, closed-end fund. And to narrow down this list to a smaller group of stocks, we could use our filters above, up here. If you created a watch list and you track a certain group of stocks and you want to see what's going on in that group of stocks in a pre-market, you can filter out this report using this filter in my watch list. We're going to use this filter in our example in ETF. I'm going to drop it down, and now we have this ETF menu to select from. We're going to select this one, SPY, in our example, and when we do that, the list below gets filtered by stocks that are holdings in SPY ETF. So what we did was narrowed down the group of stocks we're analyzing to the S&P 500 companies. right? SPY is the S&P 500 ETF. These are the S&P 500 constituents. And here we have 14 stocks that made it onto our largest percentage gainers list, 31 on our decliners list. And from that perspective, that also points to a bearish bias in pre-market trading, right? We looked at it from a couple different perspectives. They all kind of indicate the same thing. Stocks in the pre-market hours are trading, in a more negative bear sentiment. So we'll give it a couple minutes. If you have a question, I'll take them now.
Nothing yet, D.
Okay. Let me come to, we're talking about price action analysis. I'm just looking at Meta here, down 16%. So I'm just going to use Meta today. And they came out with earnings. And after earnings, this is the reaction, down about 16%. But let's take a look at the price action yesterday from our VWAP table. And I'm just going to use it as an example. Here, I'm going to go to price action analysis. And let's look at yesterday's trading. So I'm going to go trading VWAP over here. So this is so far today where we are in the pre-market hours. But I'm going to go to yesterday's VWAP because we usually don't do this, like use, and these features have been updated. So that's why I want to just kind of go over it. And this is, we're not open yet for regular hours trading. So this is regular hours trading VWAP. So we're looking at yesterday's data. And when we look below, we have a minute by minute summary of what happened in that minute's trading. Okay, so these are the alerts here. We have volume statistics if you want to see how much sweep, block, dark pool. Let's discuss all of these, but I'm going to come here on the summary stats. And in the summary stats, we track each minutes of trading. And if something's happens in that minute that's unusual or something that we consider an alert, we will list that alert. And right now we have a couple of them: volume bursts and price fades. So let's talk about the volume bursts first. Okay, and you could change these by clicking down, and you could change the view to price fades. Let's look at yesterday's volume burst in Meta. And we have this comparison box. So we could look at yesterday's volume burst to 30-day averages and, other benchmarks. Let's stay first on the volume burst. And a volume burst is looking at a particular minute's worth of trading and saying, okay, in this minute, the Meta traded this much volume, right? Whatever it is, 10,000 shares, 50,000 shares, 1 million shares. And then we say, is that a lot of volume for this particular minute and time of day? And if it's a lot, I think we do it at a 2.8 standard deviations from your average. If it's a lot, we tag it because something may have been going on. It's not typical to see such a large volume. So we call it a volume burst. Okay, that something happened, like either a program trade went in there, it could have been a hedge, something happened. And then we say, what besides the volume burst, which way did the stock move that minute? Did it move higher on a big volume or lower? So if it moved higher, we would say it's a big buy volume burst, because to move prices higher, you need buyers to take the offers. If it moved lower, then we call it a sell volume burst, because to move prices lower, you need people to start hitting the bids lower. Okay. So now we have these volume bursts, and yesterday there are a lot of them. You could see 35 buy, 44 sell. And that's because, ahead of earnings, I think that's just typical. You see bigger volumes heading into earnings. So it's not an unusual probably to see that a big uptick, because you could see here, usually you see 10 on average per day up and down. And if you wanted to see the times in there, if we click on that, we could see these are all the volume bursts here. So these are the times that they happened. And this is the notional value of the volume bursts, right? So at 357, we had $100 million worth of stock on the buy side, 356, 81 million, and so forth. So a lot of them over here. And this little plus is also indicating that besides tagging a big volume burst by volume burst, something else happened that very minute that could have caused it, right? So if we click on that at 1 p.m., we could see here, okay, at 1 p.m., there was a big buy burst in Meta, but there was an event. This happened to be crude oil prices. Probably, that event didn't have an impact on why Meta did a volume, unless the whole market maybe jumped. But it's just showing you other things going on in the marketplace that may contribute to more volume or action. So let's go back to the summary, and the same thing on the sell side. Okay. Now, next to it, this is the count. How many. Next to it, we have the total dollar value of the volume burst to the upside versus the downside. And you could see here that we had $1.7 billion to the upside, $2.1 billion to the downside. So a little bit more skewed negative, but I would say it's fairly, close. It's not like 10 times as many. When you start seeing really big, like 5 times as many, then you start getting more curious what's going on. But this is fairly close. It could keep bouncing around that ratio. And if we looked at the last 30 days, we see that on average there's more notional to the sell side than buy side, but they are pretty close to 430 million on average versus 424 million. It's a little bit skewed to the downside, but not a great big deal. So we're just looking at the considerations here. Now, next to that, right? So keep in mind, we're trying to compare these. We're trying to compare all these benchmarks to see how much, if there's a big deviation all of a sudden, right? Like that's what we're looking for. Is there a big deviation? And there's a skew there. There's definitely a little bit of a skew, but not great so far. What about the VWAP prices? So why do we put? So these are the VWAP prices of all the volume weighted average price of all the buy bursts, $494.80. And then we compare that to the volume weighted average price of all the sell bursts, $494.10. So why are we doing that? Well, if the volume bursts are fairly balanced, we should see these close together. In other words, even if the stock is moving down or if it's moving up, if we're getting a almost equal amount of volume bursts at every level, we're going to see these prices fairly close. They'll both move down as the stock's moving down. They'll both move up as the stock is moving up, and they'll be pretty balanced. Meaning, we got some activity on both sides, as the stock is moving. What if they're deviating, right? That's what we're looking at. How much are they deviating, because if the stock is moving down, 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 and we're seeing this getting pulled further and further and further away from this, then you got two numbers diverge, right? We're looking for a big divergence where we're like, whoa, well, the liquidity on one side is disappearing, right? So that's kind of what we're aiming for here, is larger and larger divergence. Okay, this doesn't look like a huge, divergence. So they're not perfectly equal. So you could see, like, as the stock is moving lower, this is moving away further and further, meaning, like, not as many buy bursts coming in as the stock's moving lower, but not a great divergence. It's a high price stock. It's almost a $500 stock, so 70 cents is not that much. Obviously, now that we have this big gap, these will start diverging more now. But on a day, we see not a very huge divergence, but still skewed towards that downside. Then the next thing we look at is, well, what happens when the volume burst is to the upside? What is the average stock move, right? And what happens when the volume bursts to the downside? What is the average stock move? Because if we have a big volume burst, let's say, 100 million shares, 50 million shares, which would be unusual. Well, if the stock moves up, but not by a lot, right? Not by that much, that indicates that there's a good amount of liquidity on the sell side that somebody could access. It doesn't take much. You don't have to move the stock that much to get that much stock. So there could be, a big, seller willing to, as soon as somebody comes in with a lot of stock to buy, there's plenty of it there. You don't need to step up that much. Okay. That's why we're looking at the average move, right? Now, if you're moving a lot, what would that indicate? Well, if somebody comes in to buy $50 million worth of stock, and the stock moves a lot, well, that indicates two things. One is that there wasn't enough stock there for this person to buy, right? He had to step up. He had to move the book up, right? He had to lift the offers up to get his amount. And not only that, that buyer's confident enough that he lifted he wasn't waiting. He was willing to lift the markets. And the same thing to the downside, right? So the reverse to the downside. So we're comparing, like, are they equal amount? Like, what is the average move? We're not talking about 100 shares here where, you're not going to move the market. You're just going to get whatever the MBBO is, right? Maybe 1,000 shares, or maybe 2,000. So on average, the more shares you need, the harder it could be to access liquidity. You might have to move markets. So that's what we're looking at here. The liquidity of the buy burst versus the sell burst. Now, yesterday, we see a skew towards the downside. Not great, up to the upside on average. We saw the markets increased 48 cents. To the downside, it decreased on average 69 cents. So less liquid to the downside. In other words, those volume bursts to the downside moved down by a bigger magnitude, meaning that there wasn't enough there to support those volume bursts, and the sellers were willing to go down for it. All right, if you have a volume burst, you have to have a seller willing to hit it down that far. So let's compare that to the average, and you could see that yesterday the buy burst, typically we saw 52 cents versus 48 cents, meaning maybe there's the sell pressure was a little bit higher. Yesterday you didn't have to step up as as much as you had to typically, but you had to step down a little bit further than you did typically. Now, I'm not saying that this was a forecast for their earnings, because nobody knew what the earnings, the earnings, nobody knows. We're just looking at, if there's, what we're looking at is if there is perhaps a downward pressure on the stock, let's say bad earnings, well, this may indicate that the downside might be less, that the magnitude to the downside could be potentially greater, because we're just looking at the liquidity of the markets on which way, based on which way the flows move. Is it equal if the flow is moving to the upside or to the downside? What type of liquidity are we seeing here, and what type of pressures are we seeing, increasing? So this is what we're trying to start to paint a picture and get more insights, okay, of large dollar movement in the stock, because the larger the dollar movement, the larger the dollar trades, the more likely could move those the stock prices. So that's looking at the volume burst for Meta yesterday. Now let's reverse it, right? Now let's reverse and say these were unusual. The volume bursts were an unusual amount of volume. But we could also just analyze the price in an unusual price move on volume that's not unusual, right? Like, what if we have typical volume? Let's say, maybe typically every minute, 10,000 shares, right? 10 or whatever it is, $2 million worth of stock trades on a typical minute for that period. So that's not unusual, but what could be unusual is that the price moves by a greater amount than typical, but not supported by a big volume, right? So all of a sudden, why did the price move so much? It wasn't like this great amount of volume. Like think of real estate prices. Well, maybe for the prices to move up 10%, you have to have like 10 houses sold. But what if it moved up 20% all of a sudden and only 2 houses sold? So something happened, right? There wasn't big volume, but all of a sudden the prices moved really, really fast, up or down. So that's what we call a price fade. So let's take a look at that. These are price fades yesterday. Let's compare those to price fades, volume burst. Here, price fades 30-day average. So yesterday, there's an equivalent amount, 5 price fades to the ask side, 5 price fades to the bid side, okay? So what does it mean on the ask side? Here, there's 5 of them. We could even go and look at one. Let's look at, where's the big one? Okay, here's one, 1017, the biggest one, 3117. So here's an ask fade. So what happens is that you could see that the volume here stayed within, its typical range, $31.7 million worth. But the price over here increased by $1.37, which was already a, not what we clocked it as, is that's an unusual dollar move for volume that's typical. So why would that happen? Well, if there's not a lot of volume, right? So there's no justification like where there's like a lot of volume moving it up all of a sudden. That means that the liquidity or the prices that people were willing to sell it at faded, moved higher. So we're not willing to sell it at these prices anymore. We don't care. Right. Now we wanted to sell. We demand higher prices, right? So that's an ask fade. It became, at that moment, less liquid on the offer. Okay. And we could see there's nothing in particular that minute. There was a sell burst right before, it came back up. But what happened was that for whatever reason, that minute, maybe the market's widen out, the specialist or whatever, that maybe somebody released their limit orders or their VWAP orders, whatever, but the price faded that minute. But it looks like it started coming back in anyway. So maybe nothing in particular, like where it was momentary. Okay. So that's what an ask fade is. We're gonna go there, look at it, and be like, okay, there's nothing else to it. It didn't fade and permanently. It kind of started coming back in anyway. But it's something we want to go look at. And yesterday, there are 5 on the ask, 5 on the bid. It looks like to the bid side, there's a greater dollar value on the sell side. And you could see that the fades on the bids look like they exceeded a little bit the fades on the offers. So this also points to a little bit less liquidity on the buy side, right? Because when the markets faded, well, they faded by a bigger amount on the bid side, on the buy side, than they did on the ask side or sell side. All right, and these are the 30-day average price fades. So you could see here we got 6 versus 4, so it's close. A little bit more on the bid fade. These are the VWAPs. Okay. So we have a couple minutes left. I just kind of wanted to start out, pointing out how, some of these indicators and insights we could glean from. I'll do some more because you have other metrics in here we didn't cover today.
Is there a quick way? I forget who asked. We had so many people on the chat to look and see how the stock responded. I don't know, after earnings for a day, a week. Is there any way to look that up real quick?
So really quickly, I'm going to just go to this table, earnings moves. We have like a minute left. And then here we could see this is what the stock typically did. They have earnings, gap, 50-50, earnings move, and drift. But we don't have enough time to go.
Wow. Back in February 22, it's had some big moves.
Yeah.
Awesome.
Yeah.
Thanks, D, as always, my friend. Great job.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
All right, everyone, have a great trading day.